Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain details about how to solve a problem related to depreciation when the problem relates to complete sale of asset. Let's go ahead and figure it out with an illustration which we'll be mentioning now. So when we speak about depreciation, which is reduction in the value of asset, now that depreciation we have learned the SLM method, the WDV method. Now we'll be solving a problem whereby there is a complete sale of asset either with the SLM method or either with the WDV method. Any of the method can be applied in the question, and the main core reason why we are solving this problem is to understand what is the effect on the value of the assets when there is a complete sale of that specific asset. Here we'll be also mentioning that we have been utilizing this asset for more than 3 years, just so that you are able to figure out how to calculate the depreciation using either of the methods, and then we'll further go ahead with the preparation or the calculation whereby there will be a complete sale of asset, which will lead to further calculation of profit and loss. So let's figure it out how to find out depreciation or probably the calculation of profit and loss with a 3-step process, that is the timeline, working note, and then passing the journal entries of the same. Now we'll note down the sum that we'll be jotting down on the sheet. Please make sure that you note down all these details so that you have all the details handy for your reference anytime in the near future. So now that we have mentioned down the problem here, which refers to Messrs. Bala Limited, we have mentioned certain details for the financial year 2018-19. We'll go ahead with all these details in the chronological order, and then we'll figure out how to prepare the timeline for this. So Messrs. Bala Limited has provided these details for the financial year 2018-19. We'll just go through with the first transaction. On 1st of April 2018, they purchased asset number 1 for rupees 6 lakhs. On December 15, 2018, they purchased another asset for rupees 5 lakh. That means asset number 2 was purchased for rupees 5 lakh on December 15. Now, as you know that while calculating depreciation, you have to take in consideration the tenure for which it has been used for any financial year. That means if the asset has been purchased in the month of April, then from April to March, that is the tenure that will be used for calculating depreciation. However, if it has been purchased in the month of December or any other month apart from April, you have to calculate the tenure from that specific date of purchase until the financial year end. That means March 31st. On 31st March, they have given another information whereby they have mentioned that asset which was purchased on 1st of October 2015 for rupees 10 lakhs was sold on 31st March 2019 for rupees 6 lakhs. Now, if you know that they have purchased this asset in the month of October, that means 1st of October 2015 is when they have purchased this asset, and the cost of the asset was 10 lakhs when they purchased it. Now that they've sold out this asset for rupees 6 lakhs, we have to further evaluate whether there is a profit or loss on this transaction, after which we'll be valuing the calculation or will be further evaluating what is the value of all the assets that we hold at the end of the financial year March 2019, as the financial year is from April 2018 until March 2019. So now let's figure out few more details on this, whereby they have mentioned that depreciation is to be provided at 10% per annum SLM method, that means straight line method. So If you know that, we'll be further calculating the calculations, or we'll be further going ahead with the calculations as per SLM method itself, whereby we also know that under SLM method the depreciation is calculated on the cost price and not on the balance of the asset every financial year end. So it will be a straightaway calculation. So make sure you have all the details. We'll first prepare with the timelines, and then we'll further go ahead with the preparation of working note, and then passing on the journal entries and the final evaluation of all the assets with us. Now, as you can see that we have mentioned the timeline details. The first refers to year 2018-19. That means the current details that have been provided. And the second detail refers to year 2015-16, whereby we have procured an asset in that specific year for rupees 10 lakhs, which was sold in the year 18-19 for rupees 6 lakhs. So now we have to further evaluate how many details are there, or how much details are available when it comes to preparation of depreciation of that specific asset. Now, the first timeline will refer to April 1st, whereby we have procured asset number 1, which is costing for rupees 6 lakhs. On December 15, we have purchased asset number 2, which is costing for rupees 5 lakhs. On March 31st, asset which was procured on 1st of October 2015 has been sold out for rupees 6 lakh. The cost price of that asset was 10 lakhs, and there is a depreciation that has been provided at the rate of 10% under straight line method. Now we'll further go ahead with the working note of all these three assets. Now, if you know, SLM method, as you have already understood, that goes further with preparation of cost price as including being depreciation a part of it. That means depreciation will be calculated on the basis of the cost price and not on the balance which stays after every financial year, which is the reduction in the value of asset. That means if the cost price of the asset is X amount, and if there is some sort of deduction, or there is certain deduction of Y amount from that cost price, so X minus Y, whichever the answer is, that value won't be calculated as this SLM method. So when we talk about SLM method, this will be only on the cost price, that is a stagnant depreciation will be depreciated every year. But there is one thing that you have to understand, that the tenure is very important under SLM method. No matter whichever method you choose, SLM or WDV, tenure is very important to calculate the depreciation, because that will give rise to exact depreciation calculation. Now let's go ahead with the working note first. So we have prepared the working note for first asset, that means asset number 1. April 1st, this asset was procured, and we have to calculate the value of this asset as of March 20. That means 31st March 2019, we have to calculate this depreciation. So when we talk about 18-19 year, April 18 or probably 1st of April 2018, we have procured this asset, and this asset was with us until 31st March 2019. That means it has been used for 12 months straight out. So the straightaway depreciation on this specific asset will be cost price, which is 6 lakhs, 10% depreciation on it, which is 60,000. So 6 lakhs, the cost price minus depreciation, will give you a balance of 5,40,000. This will be the value of the asset that we hold. That means asset number 1 as of March 2019. That means 31st March 2019, we have the value of the asset that we hold with us. First, this is the working for asset number 1. Now we'll prepare the working for asset number 2. So we have prepared the calculation for asset number 2. Now this is really tricky. Now the cost price of this specific asset was 5 lakh rupees. 10% depreciation has to be provided on this. As we have already mentioned, tenure is really important here. This asset was purchased on 15th of December 2018. That means from 15th of December 2018 until 31st March 2019, this asset was used. So we have to calculate depreciation only for these many days. So from Jan until March 2019, we have 3 months, 3 whole months. But for December, we have only 16 days usage. So we have used this asset for 3 months and 16 days. So what we have to figure out in this specific asset calculation is that we have to calculate the total depreciation for 12 months, which is 5 lakhs multiplied by 10%, which gives you 50,000. If you divide 50,000 by 12 months, you get per month's depreciation, which is 4167 rounded off to the nearest digit. Now 4167 being per month's depreciation, if you use this for 3 months calculation, which will give you 12,501 being the depreciation. Now is 4167 is the per month's depreciation. That means for the month of December, it has been used only for 16 days, which gives you 4167 divided by 31 days, as you have 31 days in the month of December, which will give you per day depreciation. And if you multiply that with 16 days, you will get a total of 2151, which is the depreciation for that specific days. That means 16 days of the month of December. So the total depreciation will be 3 months depreciation 12501 plus 16 days depreciation 2151, which will give you a total depreciation for this specific asset. 14,652 is the depreciation for this specific asset. Now the value of this specific asset will be 5 lakh, that is the cost of that specific asset, minus 14,652. This will be the value of asset number 2. Now let's go into the calculation of asset number 3. So as you can see, we have figured out the working for asset number 3 itself. Now again, while calculating the tenure here, you have to understand this asset was purchased in the year 15-16. So since then, we have been using this asset until the financial year 18-19, whereby at the end of the financial year, that means 31st March 2019, we have sold off this asset. Now, this asset was purchased on 1st of October 2015. That means for the financial year 15-16, we have used this asset only for 6 months. Straight away, flat out 6 months we have used this asset. So 10 lakhs is the cost price multiplied by 10% of depreciation rate multiplied by 6. That means 6 months divided by 12 months. That is the tenure it has been used. So total months it has been used out of the total months in the year. 6 upon 12, you get 50,000. That means that is the depreciation for that specific year, 15-16. Now, in the financial year 16-17, it has been used for the whole year. That means all 12 months. So that means we have to calculate depreciation 10 lakhs into 10%, which gives you 1 lakh depreciation. Again, for the year 17-18, you have 1 lakh depreciation, and for the year 18-19, you have 1 lakh depreciation. Now this is the year where you have sold out this asset. That means in the financial year 18-19, you have totally sold out this asset. That means when we talk about selling off this asset, we have to calculate the total depreciation since the day it has been procured, which gives you the total of 3,50,000. That means 15-16, 50,000, 16-17, 1 lakh, 17-18, 1 lakh, 18-19, 1 lakh, 3,50,000 is the total depreciation. Now we'll pass on the journal entries for all these transactions, and then we'll figure out what is the value of all the assets. I hope all this working has helped you clarified how is the working supposed to be done and how the tenure is supposed to be calculated, especially when the asset has been purchased in the mid of any month or any specific day at any point of time. That means any month, any specific day. Now it will be very clear for you, or it will be very easy for you to understand how to calculate depreciation or per month basis or per day basis. Now let's figure out what are the journal entries that we have to pass here. Now that we have figured out the first three journal entries, that means first entry which refers to April 1st, procurement of asset, purchase of asset, asset 1 to bank account, which was for rupees 6 lakhs. On December 15th, we have procured the second asset, that means asset number 2 to bank account. Then we have mentioned the entry as asset account debit to bank account. Now on 31st March, there are two entries that you have to refer to. The first being depreciation and the second being sale of asset. Before that, we have mentioned the depreciation entry, which is an expense entry. Hence, depreciation account debit to asset 1 account to asset 2 account and the asset which has been purchased in the year 15-16. We have calculated the total depreciation for all these three assets, and now we'll be mentioning the total depreciation under the depreciation head itself. So the total depreciation for the financial year 18-19 is 1,74,652 rupees, which includes depreciation for the assets that have been procured in that financial year itself, that means year 18-19, and the asset which has been purchased in the financial year 15-16 as well. So if you can see, we have mentioned depreciation against each of those assets. For asset 1, we have 60,000. For asset 2, we have 14,652, and for asset 3, we have a flat out depreciation of 1 lakh. Now we'll be calculating the profit and loss, and then we'll be further figuring it out how much is the value of the asset that we have. We'll take off the sheet and then we'll do the further calculation, and then we'll bring this depreciation or the journal entry sheet back again. So we're taking off the sheet now, and now we'll further go ahead with the calculation of profit and loss for the asset which has been procured in the financial year 15-16. So as you can see, we have figured out the calculation for asset number 3. The cost price of that asset as on 15-16, that means financial year 15-16 refers to rupees 10 lakhs, out of which we have calculated the total depreciation in the working for all these years until which we had this asset with us, that means 31st March 2019, which amounts to rupees 3,50,000. Now the book value or the market value of this specific asset as of 31st March 2019 is 10 lakhs minus 3,50,000, which gives you a total of 6,50,000. However, you have sold this asset on 31st March 2019 for rupees 6 lakhs. That means, so if the market value of this specific asset is 6 lakhs 50,000, and if you have sold this asset for 6 lakh rupees, it is a clear indication that you have incurred a loss of rupees 50,000. Now with this transaction, we get to know that whether we have a profit or whether we have a loss. Hence we'll be further going ahead and mentioning that sale transaction entry with the profit and loss incorporation in that. Now let's get back to the journal entries and we'll figure it out how to pass the sale entry for this specific asset being sold out completely. Now that we are back on the journal entries page, we'll further go ahead and record the sale transaction entry. It will be a combined entry for you to understand how the entry is passed. So if you can see, we have figured out the last journal entry of this specific sum, whereby we have mentioned that the total amount, that means the asset amount or the market value of the amount, has been mentioned in the asset category. Hence the entry that has been passed is bank account debit, profit and loss account debit to asset account. As the asset has been sold out, hence it is seen in the credit balance or probably the credit side of the journal entries. As we are receiving money, hence the bank account is debited, and as there is a loss, hence the profit and loss account is also debited. Had it been there was a profit here, P&L account would have been credited. The amount mentioned in the bank account is sale amount, that means 6 lakhs rupees. The profit and loss account will have a total of 50,000 as that is the loss, and the asset account will have a total of 6,50,000 as that is the market value of that asset. So with this specific journal entry, we get to the closure of this sum. That means the total amount of depreciation and the journal entries have been passed here. Now we'll further go ahead and figure out what is the value of all the assets that we hold. For that, we know that the total depreciation that we have deducted will be subtracted from the cost price of the asset, and the balance that is left is the value of the asset that we have as of 31st March 2019. So let's go ahead with that part. So as you can see that we've figured out the balance of all the assets that we have until March 2019. That means 31st March 2019, we have asset 1. The cost price of the asset being 6 lakh, depreciation deducted being 60,000, total value being 5 lakh 40,000 is the value of the asset that is left at the end of the financial year 18-19, that is 31st March 2019. For asset 2, we have the cost price being 5 lakh, the total depreciation being subtracted is 14,652, and the balance that is left is 4 lakh, and the balance that is left is 4,85,348. Now the total balance of asset that we have is 5,40,000 plus 4,85,348, which gives us a total of 10,25,348. Now for asset number 3, which was procured in the year 15-16, has been sold out, hence we do not hold it anymore. That's the reason we haven't incorporated the total of that asset. So with this, we get to the closure of this specific sum, where we have passed the working notes for the calculation of depreciation for all the 3 assets. We have passed on the journal entries, and also we have calculated the total balance of all the assets that we hold at the end of the financial year 18-19. So this is how you solve any specific problem related to depreciation for the complete sale of asset under SLM method, or if it has been under WDV method, you can use the WDV method depreciation as well. The only difference is that you'll have to calculate depreciation on the balance of every financial year, and that will be applicable only for the asset which has been procured in the year 15-16, as that is the long going asset, whereas these specific assets were procured in the financial year itself. Hence you don't have to further go ahead with any further depreciation calculation. It is a straight out depreciation. So I hope this sum was very clear in understanding how to calculate depreciation when there is a situation of complete sale of asset. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.